AEM was a really interesting company, is a really interesting company, and it's a company that was growing very fast and had very high margins. They had proprietary capabilities in the area of fuses for aerospace applications as well as consumer electronics applications. What made this interesting as well was that AEM had half its business in China, and they were separate legal entities. This company had probably 30 PhDs on staff. They hired the best and the brightest to keep their technology ahead of the competition. And what we found out when we marketed the business is they indeed did that. And in the end, we were able to make a market. We had solid offers, and one buyer just wanted it more than anyone else. There was a lot of hard work and a lot of good decision making, and actually being really frank with the buyer as well as our client about what was possible. We had very frank discussions, more so than I'd ever recalled prior to that, with buyers. Here's what we're worried about. What are you worried about? And through deliberate conversation and analysis, a lot of analytics, everybody arrived at a price that was acceptable to both parties. This company was unusual in most bankers' experiences that it kept overperforming. We were presenting monthly numbers that were outstripping expectations. But granted, we adjusted for owner-related things and all the stuff we always adjust for to get to earnings that were sanitized. But we just kept stressing the value of the company. And we gave them enough ammunition to keep going back to their investment committee and getting them to pull the trigger. We were able to present compelling data throughout the sale process to enhance the value in the eyes of the buyer.